The wait is over. Yes, in the next few months, nearly all the remaining pieces of Obamacare will fall into place. And on January 1st, just about everyone must have health insurance with government help if sorely needed. News Radio 600, KOGO, Sully here, your maven of subtlety, your leader of the coalition every day till 7 o'clock. Great to have you along today. Do me a favor, go to KOGO.com, keyword Sully, find out all the great video that we have on there. Yes, there's still the nudity video from the new features on the iPhone OS 7 that a couple of guys took. They shared the slow motion video. So to make this Obamacare thing happen, insurance exchanges in the 50 states and the District of Columbia are scheduled to start selling policies online October 1st. This is the largest overhaul of the country's health insurance since Medicare was launched in 1966. Finally up and running. Oh, I'm sorry. Is it something, Paul? Oh, yes, that's right. It was employment. So there's a lot of stuff that we don't know about Obamacare. I am going to go over the next several days and unwind it for you. You probably saw me on TV this morning talking about this on my national show also. I'm doing this for my national audience for Big Biz Show. But I think there's about 12 pressing questions that I've come up with, and my friends, there are probably 500 more. Now, Craig Gussin from Auerbach and Gussin Insurance also has another 10 on his own. But let me just say this first. It is out-of-pocket cost confusion, number one. And your questions on will the new insurance exchange make buying insurance on my own easier, and I've already got insurance at my job, why does this matter to me? And the changes that are going to be made. I've been buying my own insurance for years. Does that change? Will these exchanges lower prices? We're going to tear all this stuff up. Your biggest questions are going to go answered. Probably the top guy locally that we can talk to is Craig Gussin. Craig's on with us in News Radio 600 Code. Craig, do we have to buy health insurance?
No, you don't. You can just pay the $95 fine and have no health insurance and worry about paying the bill when you get sick.
So it's a $95 fine if you don't have health insurance, and that's paid to whom?
The government. What they're going to do is starting in 2015, when you file your tax return, you're going to have to give them a copy of your health insurance card. If you don't, they're going to deduct $95 or 1% of your adjusted gross income to pay it.
Is it $95 or 1%?
Correct. Up to $285 maximum.
Okay. So and whatever's greater, I'm assuming.
Yes. Yes.
So it could cost you up to $285.
It could, yes.
And so you send in a copy of your 2013 tax return and your health insurance card, and that opens the door for lots of fraud as well. So let's talk. We are 6 short days away from this thing, maybe 7. Do employers have to provide health insurance or pay a fine also?
If they're over 50 employees, if they have more than 50 employees, they got a break for this year because they delayed it 1 year. But starting in 2015. They do have to provide health insurance or pay a penalty.
And what's the penalty?
Penalty is $2,000 if you do not provide health insurance at all, or $3,000 if you provide it, but the employee has to pay more than 9.5% of their adjusted gross income.
So in other words, if you provide them with expensive health insurance, you got to pay a fine also to the government.
Depending on how much the employee has to pay and what the plan looks like, possibly, yes.
The interesting part about this, if you think about this, is that there's going to be, and correct me if I'm wrong, Craig, there will be companies that will come up with insurance policies for these companies over 50 employees that just barely make it under the gun to qualify for Obamacare. And what's going to end up happening is these companies are going to say, well, it's cheaper for me to buy this crappy policy than to pay the $2,000, but the employers are going to get worse insurance as a result of it, correct?
Yeah, and what's going to happen is this. When you look at Covered California, which is our exchange in California, you go and when we start looking at the plans, well, one of the keys is what are the networks? And one of the things that you're seeing people do is some insurance companies are reducing the network. One company, there's a rumor out there that is going to the Medicaid network, which means there's no scripts and there's no Sharp Hospital. So if you think about that, what's left in San Diego County? You got to really be careful when you're looking at some of these inexpensive plans. Can you still see your doctor? Can you still see your hospital? And yes, there is a plan that you can buy where you can only see doctors in Mexico, and that is going to be a very inexpensive plan. And I can see some of my employers looking at a plan like that as an option for these employees going, how can I give them health insurance, but also make sure they pay less than 10%.
What, let me ask you this. What if can we just pay the fine and buy health insurance whenever we want?
That's a great question, Sully. And it's probably the one thing in America that nobody gets. Come April 1st, 2014, nobody in America can buy health insurance.
Because the exchanges are closed, right?
Yes. And nobody gets that the only way you can buy health insurance after March 31st, 2014, is if you get a job and they offer it there, you lose your job and you go on COBRA, you get married, you're going to go on your spouse's plan, or you get divorced and you're going to go on COBRA, you have a baby. Outside of those, what we call qualifying events, nobody in America can buy health insurance after March 31st, 2014.
Which means that if you haven't purchased it by then, what happens to you?
You're going to pay a fine, and you will not be able to buy health insurance until January 1st, 2015.
So you're out for a year. So
yes.
Exchanges closes for a year, and you're done for a year. And then so the problem is you have to pay a fine, and if something goes wrong, you also have to pay the hospital bill.
Exactly. Yes, you do.
Yeah. His name is Craig Gussin. Craig Gussin is with Auerbach and Gussin, insurance expert here on Obamacare. Can you keep in other words, let's say you're employed by a company like Clear Channel, for example, and they provide health insurance, and you obviously augment it with out of deductions out of your paycheck. Can we keep that insurance?
You can. However, depending on the size of your company, you may not be able to keep the plan you want because if you're a company with less than 50 employees, then the plan you're allowed to keep has to be a plan that has either platinum, gold, silver, or bronze plan. And the platinum and gold have no deductible. The silver plan has a $2,000 deductible, and the bronze plan has a $5,000 deductible. So the plan that you have is going to change in 2014 if you're a group. And what we're recommending to groups under 50 is that you do an early renewal in December, which means you can renew your plan early, which is December, and your rates will be guaranteed for a year. And so the benefits, you can keep your 2013 plan. But for anybody with individual coverage, your plan's changing January 1 unless you bought the plan prior to March 23rd, 2010, and you have not made really any changes to it since then. And then you're grandfathered.
Okay, so and then I guess at the end of the day, is insurance going to end up costing us less overall in 2014?
No. Nope. Unfortunately, California had the 8th lowest rates in the country. And what happened was today, if I'm 20-something, Sully, and let's say you're 60, the difference in price between you and me is 5 to 1. So if I'm $100 a month, you're $500 a month. The government decided that we're going to do it 3 to 1 come January 1st because that would save money for the younger people. It actually did the opposite. We already know, as the insurance companies already know, that the cost of a 60-year-old is about $500 a month for the health insurance plan, which means they've just upped my insurance premiums to $167, and that's before the penalties and the fees and the fines that the insurance companies are going to pass down to the employees and the consumer, and it's also before they change your plan over. So really, a 20-something is going to go from $100 a month to $200 a month come January 1st. And the plan that they currently have won't be allowed in next year because it doesn't qualify for the government-type plan.
And that's Craig Gussin with our good news segment for the day on the program. I thought I'd just kick you off with something happy. Somebody give me a length of rope so I can shoot myself right now because I just want to kill myself. How can we just go move? You know what? Here's the deal. First of all, Craig, thanks for joining us today. I appreciate that. Craig's with Auerbach and Gussin Insurance. We'll put that website up on Thursday, or I beg your on KOGO.com, keyword Sully. But bottom line, you got to pay health insurance or pay a $95 fee up to $285. 2013 tax return, you got to add your health insurance card to that or pay the fee. If employers have over 50 employees and they don't provide insurance, they got to pay $2,000 per employee penalty. And you can buy insurance only up until April 1st. So if you don't buy health insurance by April 1st, you can't get health insurance for a year. So it means you got to pay the fine and you got to pay whatever your hospital bills are. More happy news from me. Coming at 20 past the hour, Rusty Nails with our What Do You Know with Rusty Nails segment. He is out on the street right now because October 1st marks the beginning of the Affordable Care Act. otherwise known as Obamacare. We think the name's lame. We need something more like, would you like fries with that care?